Declines in the global stock markets, from Greek debt concerns to concerns about U.S. growth, causing deal-making to hit the brakes. For more on some of the numbers and the reasons why, we are joined right now by senior M&A analyst, Bloomberg's Iyan Adewuya. Iyan, always glad to see you.
Morning.
We're halfway through the year. Where do we stand?
Well, we stand now at $1.2 trillion year to date. And if you look at the month of June, we had $191 billion worth of deals in the month of June, which is about a 22% slowdown from the month of May. And what I'm seeing right now...
At the beginning of the year, it was like nonstop.
Oh, we were going bonanza. And, you know, right now you're seeing a very schizophrenic M&A market, and the numbers don't really tell you a clear story. You have $1.2 trillion in deals, which is 33% larger than this time last year. The average deal size is up, but when you look at the deal count globally, it's just 3% up from last year. The only real difference this year are two things. We have much larger deal sizes, so we have 12 mega deals already this year.
So
deals
the
above 10
dollar value
billion.
is bigger, there are just fewer of them.
There are just fewer of them. And then the private equity story is there. So private equity deals are up about 100% this year, with most of them actually being private equity sales.
Right, Leonard Green, CVC with BJ's, that was one of the headlines that we've been following this week.
So they're finding the cash to do the deals because interest rates are very low. And so it's a very mixed story. You look at Europe, and Europe right now is second in deal volume compared to North America, but third in deal count compared to Asia. I mean, there's only 2,000 deals in Europe year to date. That's about 4,000 in Asia. So it's a very mixed bag you're seeing in M&A. And as you said, we're kind of hitting the brakes here. It's going to be interesting to see how we move forward.
Let's talk about the amount of cash, though, that's still on the sidelines, because it seems like even if the markets are taking a breather, even if the deal activity is taking a breather, there's a lot of cash out there.
Absolutely. And I think an interesting statistic that our reporters polled is that there's about $3.4 trillion worth of cash sitting on the balance sheet of the top 1,000 non-financial companies. And if you look inside the S&P 500 alone, there's about $1 trillion sitting inside the balance sheets of the companies in the S&P 500. And so it's going to be very...
Basically, when companies want to make a deal, they certainly have the cash to do it.
They certainly do. But there are two factors affecting it. The macroeconomic situation that you referenced, external shocks like the Greek crisis, lower growth forecasts in the United States by the Fed, are causing deal makers on corporate boards to hesitate. Exactly. And secondly, you also have internal factors such that deal valuations right now are pretty high. The average EBITDA multiple of deals done this year is 9 times EBITDA. And you look at Larry Ellison, who is not shy about doing a deal, saying that valuations are high. And so that's putting the brakes on things as well. But in cases where people are doing deals like VF Corp, Timberland, Johnson & Johnson Synthesis, where shareholders see top-line revenue growth potential, they're really rewarding the stock price of the acquirer and driving it higher.
How does this year so far compare to the boom years that we saw a few years ago?
Well, we're nowhere near the highs. I mean,
so
even with all the bad news, we're still better than last year.
Yeah, I heard you say that, but not if you go back to the record years, forget it.
No, forget it. Not anything close to 2007.
All right, Iyan, thanks so much, as always, for the context, for the perspective. Iyan Adewuya, Bloomberg's senior M&A analyst.